Okay, let's now talk about type of supply and demand zones. We have three types. We have peaks and valleys, which which they are also known as swing high or swing low. It's pretty much the same thing. Second, we have CP levels. CP levels means, or CP means continuation pattern. And we have swap zones. Those are the three type of supply and demand levels we have. We just need those three. And how can we identify them? First, let's check dollar CAD. This is a dollar CAD chart on the daily, and we have all of them. I'm sorry, we have two of them all at the same time. First, let's identify our peak or valley. Our peak is this. This is our peak. It looks like letter A, all right? And we have our valley, which looks like a V, like this. This is a peak, this is a valley. These swing highs or swing lows are the strongest supply and demand levels we can find. Every time we place our trade, our order right at the peak or at the valley, we have higher probability that we will make profit out of it. When we use peaks or valleys, if you want to make note of it, that's fine. If we use peaks or valleys to place our orders, we have higher probabilities. Okay, so that's basically a drop base rally, and a peak it's formed by a rally base drop. It's very simple, very simple. So basically, this is our peak. This is our valley. See how price reverse from this valley, and we have here a peak that has not been tested. Okay, so we have a peak and we have valleys. It's very easy. It's very simple. Then we also have CP patterns or continuation patterns. What is a continuation pattern? A continuation pattern looks like this example here on USD CAD. And a CP pattern, it's formed by a drop, base, drop. Or it can be formed by a rally, base, rally, base, rally. So these candles like this, they are called CP zones or CP levels. Remember that we have to apply our rules to identify if we do have a zone or if this is a valid zone. So as you can see here, price from this valley, it created a new high. We can fit the base of the candle at least 2 or 3 times in the rally. We also have here a peak. This peak, created a new low right here, and the base can fit at least 2 or 3 times in this huge drop. This is the daily chart. Now it's the same thing for the CP levels. CP levels are the same thing. We have a strong movement to the downside, strong push, price reverse to the zone, and then drops again. But if you see, all rules are applicable here. So that's basically peaks and valleys. Let me look for a swap example. Okay, I got one. When we talk about swap zones, that means that your previous demand fails and now it becomes supply, or the other way around. Your previous supply fails and now it becomes demand. It's basically like the most common rule when using support and resistance. If your support breaks, then it's going to be a resistance level. If your resistance level breaks, then it's going to become a new support level. So it basically is the same thing. It's the same thing, the same rule. However, we use zones. For instance, we have here a demand level right here. Then if you see here, then if you see price breaks the level, breaks the zone, this zone didn't hold. Now what happened? Now this level, since it was broken, it became supply level right at this candle. See, price dropped, created a new low, price reversed, and then drops again. That's basically a supply level. That's basically a swap zone. This previously was a demand level, but now it became supply level. We also have another one here, very close, very close. We have this a strong push to the upside. See, very beautiful demand level, but didn't work, didn't hold. Why? Because see the structure already bearish. So but what happened? See, price created a new supply level right there. So basically this is a swap zone. Why? Because my previous demand didn't work and it becomes supply. That's a swap zone. Simple as that. It's very easy. So those are the three types of levels that we will use. Those are the three types we will find. And remember to watch the previous class about supply and demand levels, and make sure you're using valid supply and valid demand levels in terms and in relation with the trend. Try to do some chart work, applying both concepts, following the trend, using valid supply and demand levels, and you will see you will have much better results.